Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Rich, Sonali, Basak in for Caroline Hyde. We're counting you down to that closing bell here on this Fed Wednesday, here to help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovec. We welcome in our audience across Bloomberg Television, radio, and YouTube. And Carol, a lot of people came into today expecting Jay Powell to telegraph the number of rate hikes that he was going to give us this year. And, well, it looks like the market got it right. We got one today, and he said we're probably going to get about 6 more going forward.
Every meeting is a live one. And what's interesting is here we are, in terms of the equity trade, pretty much at our best levels of the session, especially on the S&P and the NASDAQ. So despite that initial sell-off following that Fed meeting and maybe some concerns about maybe a hawkish Fed, can I even say that? We've bounced off of those lows, Tim.
Yeah, it did seem like equity investors, and look, I know today is all about the bond market, and Taylor's going to get to that, but it was remarkable to see the pullback in equities.
Tim, every day is about the bond market.
I know, it is, especially in Taylor's world. But look, the smart money, that's absolutely true. But look what happened to equities today. I mean, it's absolutely remarkable to see him bounce back like this on those strong comments about the economy. But I got to tell you, we just talked to Liz Ann Saunders at Charles Schwab, who said, hey, I don't think the economy is as strong as Fed Chair Powell is making it out to be.
I don't think anybody does.
I wasn't going to call you out on the bond market, Tim. I was just going to let Romaine do that for me. Let's take quickly look at this bond market.
Good cop, bad cop, Tim.
Yeah, it's like this game we play so that I always look good, Tim. You take a look, though, I mean, pretty incredible, Romaine. We've talked a lot about the front end. At one point, we had the 5s, 10s, and the 7s, 10s inverted. Some of that has unwound, but it is a pretty flat yield curve if you think about just 24 basis points here on the 2s, 10s.
All right, a 2% gain in the S&P 500 on Tuesday. Well, a 2.2% gain on the S&P 500 on this Wednesday, up about 95, 96 points here on the day as we get the closing bells in New York. The Dow Jones Industrial Average also going to finish higher here for another day, up 519 points or about 1.6%. The Russell 2000, a great day. Up 61, 70, 62 points, up about 3% on the day. But let's take a look at the NASDAQ here. I want to point out the NASDAQ composite right now is up 3.8% on a daily basis here. Remember, it rose about 3% yesterday. The NASDAQ 100 also up about 3.7%. You combine yesterday's 3% gains, we're up 7% here over a 2-day basis. This is going to be the strongest 2-day gain that we've seen for the tech stocks going back to November of last year.
I think I could beat that.
Of 2020, I'm sorry.
I think
of 2020.
I'm just going to say I think I can beat that.
Can you beat that?
Yeah, NASDAQ Golden Dragon China. You ask why I always talk about it. Oh, come on.
How did I get that wrong? I knew you.
I don't know. Just not your day today.
What is it, up like 50%?
Anyway,
today?
the NASDAQ Golden Dragon China up almost 33%. We know Chinese stocks rallied in China, in Hong Kong overnight. The government coming out and basically saying we're going to do whatever we need to shore up the financial markets. It's just a reminder, though, that the markets are kind of at the whim of the government, the good and the bad and the ugly, too.
Certainly. Carol, you know, it's interesting. You mentioned that you were speaking with a guest earlier on radio. We were also speaking with Mira Pandit over at JP Morgan. She said, everyone take a sigh of relief because tomorrow might actually be the real days. You think about today and sort of the one-day moves that we see sort of seems happy right now. If you're along the markets, green on the screen, but we have to remember this is just a one-day reaction. But this one-day reaction looks pretty broad-based when you think about sort of the gains that we've seen and sort of this risk-on sentiment, Carol, right? Semiconductors, auto components, banks. I mean, you think about sort of this reflationary theme underway, at least on the front end of the curve. You're up 3 to maybe even 5% on some of the best individual sectors on the day. You come down to the bottom, there's only about 3 sectors in the red today, but they're utilities, it's food and staples, and it's energy. Now, this is interesting because energy is now lower here for about 3 straight days. You wonder if some of these inflationary assets like those food and staples also coming down just a little bit, Carol.
Yeah, you know, it reminds me that when you do have the Fed raising rates, right, the equity market tends to do well, and we're certainly seeing that play out today. All right, as for the gainers today, I got to go back to those Chinese stocks. They were top in the NASDAQ 100. PDD is up about 56% here, so pretty much closing out its highs. I did see a headline, too, that Alibaba having its biggest gain since 2014. It was up 37%.
And the Pinduoduo game, that's its biggest ever.
It's
debuted here.
Unbelievable. It's still down more than about 30%, though. Just a little perspective there. Starbucks, certainly a standout. Tim was like, you got to do this as a gainer. It's up more than 5% today. Howard Schultz back for a third time as CEO, as the company's current CEO, Kevin Johnson, is retiring. So that's kind of interesting. And Land's End, I'm going to point it out because I caught up with the CEO earlier today. It's up about 13.5%. That despite earlier hitting a 52-week low and some misses for the fourth quarter and also its outlook. But nonetheless, the CEO expecting the second half of the year going to look better.
Do you think Howard Schultz saw Tom Brady and was like, I want to unretire too? Again, this is the third time. It's pretty remarkable. Hey, let's go over the decliners, some of the decliners that we saw today. Shares of Lockheed Martin falling after Bloomberg reporting that the Pentagon is going to request fewer of those stealth F-35s from Lockheed Martin than previously planned. That's according to people familiar with the plans. Shares down about 6% today. And then Norton LifeLock falling 13.2%. This after the company's proposed purchase of Avast hitting a snag in the UK. UK regulators surprising investors with a warning that their proposed takeover risks reducing competition for cybersecurity software. And here's an interesting one. CF Industries, the fertilizer manufacturer and distributor, falling 7% today. Russia's invasion of Ukraine sparking sanctions against the country. We've actually seen CF Industries higher significantly this year, especially since the invasion of Ukraine, but actually down on the news that the two countries are actually talking.
You know, Tim, it's just a bond world and you're just living in
No.
it. Let's take a look at where we are on the day. And I think what's interesting is days like today, we're really focused on the front end of the yield curve, right? And earlier we had gotten as high as maybe 198, 199. Carol, we settle out at a 192, but I think what's significant is you're still higher by about 7 basis points on the day. You have a 5-year yield that's migrated northward to a 216. From what I can see, I think that the 5s, 10s is still about 1 basis point in terms of steepness, but you do have an inverted 7s, 10s yield curve by about 3 basis points and a flatter if you go longer out on a 5s, 10s, just positive by about 1 basis point or so. And a 2s, 10s, you're still at about 25 basis points. You're not really getting that inversion, but you're really noticing sort of this bigger lift on the front end. And that's really where we're sort of signaling, as you mentioned, Carol, these sort of sequential rate hikes that the market is now expecting.
Yeah, absolutely. All right. So the Fed largely doing what we expected it to do, moving up those inflation forecasts this year, moving down growth forecasts. Bottom line, the Fed chief, Jay Powell, saying that basically he and the FOMC said the timing was right for the moves and the projections. Check it out.
It's clearly time to raise interest rates and begin the balance sheet shrinkage. And I just wanted to say that as I looked around the table at today's meeting, I saw a committee that's acutely aware of the need to return the economy to price stability and determined to use our tools to do exactly that.
All right. So, of course, that's Jay Powell of the Federal Reserve. He says that they do have the tools that they need to really manage this. Do you guys agree, Romaine?
Yeah, well, I mean, I'm not going to get into whether I agree, but I do think it's interesting.
Why not?
Well, I do think it's interesting that he would use that word, the idea of looking around the table, and they're all in agreement on that, because I think when you look at the dot plot, it's very clear they're not really on agreement longer term. I think they sort of have a good starting point here, but the fact that there was a discussion, at least he alluded to it, a discussion about balance sheet runoff, but they weren't prepared to announce one today, that's huge. I also thought it was interesting, and Taylor, you brought this to my attention a little bit earlier, his comments toward the end about if they had known then what they know now, rates would be a lot higher today.
And saying that, of course, we don't have the benefit, right, of hindsight being 2020. But if you had known, again, that inflation wasn't as transitory, maybe we would have moved faster. That comment certainly struck out to me. And Sonali, sort of coming back to the balance sheet as well, saying that a balance sheet reduction actually could signal or replace a rate hike. So we think about 6 sequential rate hikes, but also if you think about balance sheet reduction, is that technically sort of a rate hike? Jay Powell had alluded to
that. And what does it mean for a liquidity, right? Because at the end of the day, the distortions that might be caused by that balance sheet reduction is really something that a lot of people are factoring in the market. And to the point that you were making, Carol, do we believe whether they have control over inflation? There's a lot of concern still about a lot of those supply shocks that are looming out there in the market. So clearly that is something that investors are taking into consideration and not yet convinced.
I did think that Powell's comments about balance sheet reduction and really refusing to get into the kind of the nitty gritty of the discussion and saying, check out those meeting minutes in a few weeks, because they're going to have details in there. That was a real deep tease for what that's actually going to look like, and I anticipate that you could see some serious reaction to that.
He should go work at Netflix, do one of those shows over there. In all seriousness, though, I mean, on that same topic, though, there's a big debate, and this goes to your question too, Carol, about whether I think they have the tools. There's a big debate here that maybe the balance sheet is actually a better tool right now in controlling inflation, rather than just trying to do it with the lever of interest rates.
I guess what's interesting too, and Tom Keene talked about that they're going to be watching for that next jobs report, because we've talked about higher rates mean you're going to get a higher unemployment rate. So what does that do for growth? What does that do for sentiment? And does that really become a drag on growth? So there's still a lot to, I guess, keep an eye on, guys.
A lot to keep an eye on.
All right, we got to run. All right, that's going to do it for our cross-platform coverage on radio, on TV, and YouTube. It is Beyond the Bell. We will see you again, same time, same place tomorrow.